Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Viewing the Australian dollar, as you can see, the market continues to fluctuate in and out of losses and gains after a surprise show of little interest when the Australian government yesterday announced another rescue package. Although our local share market did rally, Prime Minister Scott Morrison disclosed details of a 130 billion stimulus package, including 1,500 fortnight JobKeeper payments to subsidise wages and keep Australians employed. He said that we want to keep the economy running through the crisis, or this crisis. The flash crash, as we can see here early this morning, was quite a surprise. I haven't found any real reason behind why we've witnessed this market movement, but nevertheless, it still represents a bullish pattern, considering that we've got a doji nearly in play, but we need confirmation from the New York close. Nevertheless, I haven't backed off on my view, and therefore I expect to see a further rise up towards 61.95 or up towards an objective of 62.30.35, and that's where I believe the market will find the bearish ambush. And they'll most probably see the prices reject the level around 62.30 and back towards the downside, and see a possible challenge towards that level around 60.65 this morning, which is where the rejection was. The euro still maintains a relatively bullish stance from a technical point, even though we've had two candles pulling back from the resistance of 111.60.80. We have many events into this week, those being the US employment claims, and along with that, the US non-farm payrolls number on Friday. It is assessed, though, from a technical point, that the weaker US dollar may return and therefore would see a re-challenge to the top side of the range. So I haven't turned bearish yet until we get confirmation that the fact is that we break through the midway point and also the MACD fails this recent break above the zero axis. So let's see where we close tomorrow in New York, and therefore could give us a little bit more indication. But I do anticipate the dollar being a little bit weaker, and therefore may give a little bit of an upstep for the euro into this week. Well, the market's posted a doji, or quite close to that, a long-legged doji, which represents indecision in traders. As in theory, the long-legged doji acts as indecisiveness in terms of where the market's going to lead next. And although we have had the break of 108 figure 40, is that the market's playing to the challenge of whether it was a false break, and if so, it's trying to claim higher levels around 108.75 to 109 figure. We're not quite there yet. So let's see if the market does or is capable of holding to these gains or give them back and still remain on target, which is what the indicators are telling me, to the 105 region. Well, the pound also stays the flash crash, as you can see here. This sudden move to the downside posted a low of 122.41 before recovering back above 123. I don't have a view on the pound, but I am anticipating any rises up towards the region of 126.70 to 127.45 as a potential supply zone, and therefore I expect to see a rejection from there and look back to the downside, which could be anywhere towards 121. But first of all, as I said, I'm neutral and I'm waiting confirmation and just biding my time and waiting for the opportunity. Dollar CAD, since rebounding off 139, has played a little bit of a bullish move to the upside, although the oil is showing a little bit of a recovery here from the lows of $22 this morning. Let's see if the market does turn around, which I do anticipate, and therefore expect to see resistance coming in around 142.20 and back away and head lower. I'm a little bit concerned that the fact is that gold may not reach its objective to the upside of 1,648, and failing to pull that trigger may see the market continue to focus on the level back to 1,590. From a technical point, it's not fully bullish. There is no trend from the ADX, and that is one of my main concerns. So therefore, we could see once again, as we've seen previously, a little bit of a flush out in longs, and a break of 90 will give us the next move down to 1,570. Do be on your guard, as trading oil as well as gold, it comes at a high risk. Well, not only that, most of the markets are at the moment, but with gold, the ranges have been very, very wide in the swings of the candles. This all can come back again. Finishing up with oil, as I said, the market's responded quite well, and still holding to a bullish focus of the technicals is that we may see finally a break to the upside, and if so, clearing the level of 23.45 would give us the next target up towards the region of 24.5 to 26. I am, and I say I will continue to remain bullish as the base still continues to hold out around 20. Although we did see a sudden plunge last night, I like the way this market is responding quite well, and therefore may continue on into today's session. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report, and hope you enjoy the great start to this new day.